Welcome to Five Plan Partners Educational Insights. I'm excited today because the discussion we're going to have is topics that business owners overlook. It's a subject that we discuss constantly here at Five Plan Partners. And I'm excited because I have all three of our team members on the financial planning side joining us. I have Robert Moody, I have Mark Hume, I have Jason Hadley. Gentlemen, thank you for joining today. I have thoroughly enjoyed the dialogue that we had, and I was excited I could get all three of them in the room together with me, or should I say the Zoom with me. Now, the reason we're doing this is a lot of people need to understand here at Five Plan Partners, we are not product driven. We are advice driven. And before we work with anybody regarding their investment strategies and assets, we do a financial blueprint. And in that financial blueprint, we look at all their assets and all their net worth. And that includes if they own a business. We do business consulting. And with that business consulting and incorporating that in the financial planning process, we advise business owners on the topics they need to know about as they move forward to grow their business, to sell their business. It could also be if they want to buy another business, they want to bring family members into the business, take on partners. All of that's incorporated in our financial planning process. And I think we do an incredible job, or so we're told by our business owner clients. Now, we've got topics we want to talk to you about today. And if you know other business owners, we would appreciate it if you would share that information with them, forward them this vlog. So to start off with, Robert, I'll start off with you. One thing that we see constantly, and guys, I want you to jump in here in terms of Mark and Jason, is basically that we will have a business owner say, I've got an offer and on my business to sell it, and we will show in the financial blueprint it's not enough for them to maintain their lifestyle. I always like to say you can say you own a business, but you may ultimately just have a job or career and the value in your business is not there. I'm going to ask all three of you to jump in here, but talk about that.
Yeah, thanks, Greg. So yeah, that's one of the things as we go through your financial house process is help business owners determine their wealth gap. And so what's the wealth gap? That is determining how much you need to net from the sale of your business to be able to retire after you sell it. So like you said, maybe you have a strong offer and we want to look at it today, but if we were to sell today, we'd be giving up some future income. So we want to put that in consideration. And then also, have we done everything that we need to today to get your business, the highest attractiveness and readiness score that we can? So those are,
and with that, and all three of you jump in here, but from the standpoint in conjunction in doing the financial blueprint, we also will coordinate with the CPA. We'll also coordinate with the corporate attorney. We will have those kind of dialogues. Mark, you agree with me on that?
Yeah, I do. And one of the places where we'll do a lot of work with those attorneys and accountants is getting valuations to help drive what I have seen in my years of working with business owners. Is one of the most overlooked pieces of agreements that are really important. That's the buy-sell agreement. And, it may say at someone's death, at one of the owner's death, get a valuation, figure out how to fund it. And that's also a missing gap if that happens to be in the operating agreement. And so how are you going to fund that buy-sell agreement? Life insurance is a really great way. It's a really simple way and a really efficient way in terms of capital needed to fund that buy-sell agreement. The valuation is important from the accountant, the business attorney drafting up the terms of the buy-sell agreement, and then providing those different options to fund it. Now, one of the things that I think is really interesting about funding buy-sell agreements is that it feels really simple and clean if you do an entity purchase agreement where the business owns all the policies on all the different members of the LLC or owners of the corporation or whatever the case may be. But if you do a cross purchase agreement where each individual owner owns a policy on their counter co-business owners, then that's a more tax efficient way to fund a buy-sell agreement because at the death, each of the surviving owners gets a step up in the basis, and that does not occur in the entity purchase agreement.
So you're telling me a good handshake or a letter signed by the partners of the business is not sufficient? I'm
Usually
shocked.
not. And I even got ahead of myself a
I'm
little.
shocked. I've never encountered that before. Hello, out there, business owners. Oh, we've got something, right? What you
That's
just
exactly
described
right.
is a thorough way to do it.
That's right. And if the buy-sell agreement is not defined and not funded, what happens? Well, you find yourself in business with the surviving spouse of your late business owner. And y'all may have a great relationship, but you may not want to be in business with that person. And you may have no relationship. And so there's a lot of unknowns and a lot of uncertainty. Or even worse, you may really dislike that spouse. And so now you're forced to be in business with someone that you don't really care to spend time with. So all three of those situations are challenging. And it's really not that difficult to solve the problems. It's just about having proactive conversations.
Yeah, and with that too, it's not only on the business side, but also on the estate side of the individual, the business owner themselves. Correct, Jason? Have you ever had anybody's say to you, "Well, we have estate documents," only to find out that they had not signed them as husband and wife or as an individual? Has that ever happened before?
Unfortunately, yes, more often than you would imagine. To go back to working with the other professionals with sales of businesses. Um, not only working with the attorneys as far as continuity planning, but working with the CPAs, as you mentioned before. Just working with them to make sure that we understand the tax implications of the sale, how the sale is structured, what kind of dollar amount from the proceeds we're going to need to set aside, when those taxes are going to be due, and what we can do with those dollars in the meantime to maybe get some growth out of it in the interim. Things like that a lot of business owners just, they may not even be thinking about the tax implications at all.
It's very true. Very true.
Things like that. That's where we can really add value, help them, maximize the growth on the money that they receive from the sale. Whether it be earmarked for taxes somewhere down the road, or the net amount that they're going to have to fund their retirement.
It's all got to be coordinated if it's going to be done right. Otherwise, you create gaps and you have a lot of blind sides. And a lot of times, business owners are so focused on just growing the business or the day-to-day activities, they don't project out. And that's another thing, Robert. Going back to you, is that educate our folks on how we do project out. That if you're looking to sell your business, these are the growth rates, but looking at when you can get a better valuation.
Yeah. So, kind of going back to what Jason's talking about with taxes, a couple different ways you can sell. You can sell all at once and get a lump sum, but you can also sell over time, maybe to a family member or a child that's in the business that can't afford to buy you out all at once. And so using like an installment sale where you pay over the next 8 years, you could break up some of your tax burden. But yeah, again, using our software, we're able to project that and weigh the options and see which way works best for you in your tax situation.
Yeah.
And I think Robert brings up a great point. Been working on this with a couple of business owners over the last couple of weeks. The installment sale is a great idea for this one person I have in mind, because it's the opportunity to coordinate with the accountant, understand what the adjusted basis is, and perhaps design an installment sale that keeps total income over the course of the buyout underneath the net investment income tax threshold, which would save 3.8% on all investment income in those years.
Yeah, no, that's outstanding. And Mark, to elaborate on something you said earlier, it's one thing to talk about the sell of a business and the business owners are still alive. It's another thing when you have a death or disability occur like that. Like you said, you may wind up with a partner that you don't enjoy having. Elaborate from the standpoint, all three of you just jump in terms of if the business owner becomes disabled, has a stroke, can no longer function running the business, or from the standpoint of a death, how we work with the families of those business owners.
Yeah, there are disability is the most challenging, but there is an insurance solution for it, assuming that each business owner is healthy enough, termed disability buyout insurance. That's the easiest way, again, if they're eligible. Otherwise, you have to source it from cash flow in the business and hope the business is healthy enough and doesn't suffer from the disability of the owner, that
Right.
there's sufficient cash flow to conduct the buyout.
Yeah, very much so. And Jason, what about from the standpoint of like somebody that owns rental property, commercial properties? They have formed a business. All of a sudden, that business owner dies. Working with those properties or bringing them together as an LLC and stuff. Talk about how we've helped families with those kind of scenarios.
Yeah, I mean, it really comes down to, our capacity to be able to coordinate everything. A lot of, we're thinking about situations where, family members have inherited real estate holdings, where they've really not been involved in those holdings and all the, the maintenance and just the cost of holding those properties. We can come in and coordinate all that, pull all the information together, show them in one place, all the properties that are in the portfolio, and all the things they need to be aware of as far as, property taxes, any kind of, maintenance and upkeep that's required. Just really, really, provide a lot of value and just the basic coordination efforts.
Yeah, because a lot of times somebody may own a business and then they own the real estate separate that the business, like for example, if it's a manufacturing entity, they have warehouses, they have other things that they own that are separate entities from the business. You guys agree with me on that? And so that has to be handled separately in relation to the overall business. So yeah, that's very true. And then Robert, you brought up in our meeting, you brought up a really good point. Sometimes when we're meeting with people that own businesses, the business may be their riskiest asset, but they treat their other assets very speculative. They're not as conservative. You want to elaborate on that?
Yeah. So, I mean, a lot of business owners think they're being pretty conservative with their investments, but they're not necessarily taking into account their largest asset, which is their business, which could be more volatile. So, one thing we're putting together their financial blueprint, being able to see how that piece, the business, fits into their overall portfolio as an asset is really important, and showing them how much risk they need to take in conjunction with the business.
Well, now, also, Jason, talk about FinCEN. And when I say FinCEN, I'm not talking about SIN. I'm talking about FINCEN.
Yeah.
Talk about that.
Yeah. So one, shift gears here a little bit, but just wanted to make everyone aware of a new regulatory requirement that has taken effect at the beginning of this year, 2024. Comes out of law that was passed by Congress in 2021 called the Corporate Transparency Act. And what this does is it requires small businesses to disclose information about their what's called their material owners or beneficial owners, which really is defined as generally anybody who effectively owns at least 25% of that business, or who holds control over that business. The requirements are, so as I said, the law took effect at the beginning of 2024. It gives you a year to file this initial report. So you have until January 1st of 2025 to file the report. This basically applies to any business who has filed formation paperwork with their Secretary of State in the state where they do business. It could range for anywhere from a large scale daily operational business to someone who has opened LLCs to hold real estate, rental real estate. And the reporting requirements are basically that you have to report the name, information on the company, the legal name of the company, the tax ID, the address of the principal place of business, and then also identifying information on those material owners. So you have to report the names, their home addresses, their dates of birth, and provide copies of a state issued ID for those people. Just want to make everyone aware of that because from what I gather, it's not widely known. Hopefully you have business attorneys who are beginning to tip you off on this, but just for, the sake of being safe, just wanted to kind of bring that up to make everyone aware. I will say that this has been challenged in court. Earlier this year, a federal judge in the Northern District of Alabama struck this reporting requirement down as being unconstitutional. But from what I understand, most attorneys are encouraging their clients to continue to comply with this until the case gets through the appeals process.
Well, this is also why we encourage people to do an annual update with us on the financial planning side if you own a business, because things can change rapidly. And the other point I will make is that you may not think you need to update your financial blueprint, but when you have rules and laws and policies change, we try to stay on top of that, or to encourage you to also coordinate with your tax attorney and other professionals so that you know what's going on. It may be your business is doing well, but the regulatory environment or laws may be changing that could impact that. And so we try to keep people on top of that, as well as just like Mark was talking about, buy-sell agreements, and Robert was talking about other scenarios there, so that as you grow that business, one day you're not blindsided to find out the valuation has gone down or the industry trends have changed. That's the other thing. We like to have dialogue in terms of what we're seeing in the economy and the trends that we're seeing out there and things that they may need to take action on. So look, I could spend all day with you guys talking about this. And what I really love, and if I was pulling the curtain behind for our viewers to take you behind our financial planning strategies, because we have the ability to show you the rippling effect of decisions that you want to make. And we can run different scenarios. And people tell us all the time it eliminates their anxieties and allows them to narrow down what they believe is the right decision to move forward. And moving forward is part of it. So with that said, any parting remarks the three of you would like to give? Robert, start with you. Anything you want to say?
No, I mean, just to your point, the financial planning updates are great. So if you haven't had one in a while, let us know if things have changed, and we'd be happy to help you.
Yeah. All right, Mark.
I think we've touched on about a half dozen topics here today. It's only begun to scratch the surface of business owner planning. And so I hope that highlights and impresses upon everyone listening just how much there is to think about, in addition to being hyper-focused on running your business, growing your revenues, expanding your margins. A lot of opportunities to really enhance your life as you progress through the life cycle of your business.
Yeah. Jason?
I just reiterate that, like Mark said, we touched a number of topics. If you have any questions about these or how they might impact you or affect your business, feel free to give us a call, schedule a meeting, and come in and discuss it.
Yeah, and let me say this. I've been doing this 43 years, and here at Five Plan Partners for 19 years. What I will say to each of you that are viewing this vlog today is the battle we fight is that there are advisors out there that are product driven. We're advice driven. And in that advice driven, we will say to people, have you done a financial blueprint that's totally comprehensive, that looks at all of your assets? And people will just put us in the same category. Oh, I've got somebody. But if they're not doing a comprehensive financial blueprint, just like the analogy we use in the Your Financial House process, you would never build a house without a blueprint. and you would never give your money to a builder who says, I don't need a blueprint, just based on what you said, I can do this. You have people on this screen today, each and every day, striving to make our clients' lives better, richer, fuller, and to put a plan in place, which gives us guidance not only for today, where you are as a business owner, but where you could be and should be down the road as a business owner and as a family member or as an individual who's wanting to increase their net worth over time. We strive to help in that way each and every day. We hope you share this vlog. Please know that on social media, on LinkedIn, YouTube, Facebook, Twitter, our podcast, we continue to bring educational ideas. And we hope today has actually, as Mark was alluding to, raised more questions so that we can help you find solutions. Have a great week. Hope your business continues to grow. And as we like to say, work hard and play hard. Take care.